Question 1. The evaluation methodology shows a need to assess potential risks within the Oracle EBS R12 inventory and order management modules. Which of the following approaches best aligns with professional best practices for identifying and mitigating these risks? Option A. Prioritize risk mitigation efforts based on a comprehensive analysis of the likelihood and potential impact of each identified risk on inventory accuracy, order fulfillment, and financial reporting. Option B. Expedite order processing by minimizing data validation checks to improve customer response times, even if it means a higher chance of data entry errors. Option C. Conduct the risk assessment solely from an IT perspective, without consulting end users who manage daily inventory and order operations. Option D. Focus exclusively on implementing cost-saving measures within inventory management processes, assuming that operational efficiency will naturally mitigate most risks. The correct answer is A. Prioritize risk mitigation efforts based on a comprehensive analysis of the likelihood and potential impact of each identified risk on inventory accuracy, order fulfillment, and financial reporting. Explanation. The scenario presents a common challenge in Oracle EBS R12 inventory and order management, ensuring data integrity and operational efficiency through effective risk assessment during system configuration and ongoing maintenance. The professional challenge lies in balancing the need for robust controls with the desire for operational agility, all while adhering to the principles of sound business practice and the implicit requirements of maintaining accurate inventory and order data within the Oracle EBS framework. Careful judgment is required to identify potential risks, prioritize mitigation efforts, and implement controls that are both effective and practical. The correct approach represents best professional practice because it systematically identifies potential risks related to inventory accuracy, order fulfillment, and financial reporting within the Oracle EBS R12 environment. By focusing on the likelihood and impact of identified risks, it allows for the prioritization of mitigation strategies, such as implementing stricter access controls, conducting regular cycle counts, or establishing automated data validation rules. This proactive and structured approach aligns with the fundamental principles of good governance and operational risk management, ensuring that critical business processes are protected against errors, fraud, and system failures. It directly supports the integrity of inventory and order management data, which is crucial for accurate financial statements and customer satisfaction. An incorrect approach that focuses solely on cost reduction without considering the potential impact on data accuracy or operational efficiency is professionally unacceptable. This failure stems from a disregard for the inherent risks associated with inventory and order management. For example, reducing cycle count frequency to save labor costs might lead to undetected stock discrepancies, impacting order fulfillment and financial reporting. This violates the implicit ethical obligation to maintain accurate business records and can lead to regulatory scrutiny if financial statements are materially misstated due to inventory inaccuracies. Another incorrect approach that prioritizes speed of order processing over data validation introduces significant risks. While faster order processing might seem beneficial, it can lead to incorrect order entries, shipping errors, and customer dissatisfaction. This approach fails to acknowledge the critical importance of data integrity in the order management lifecycle. Ethically, it compromises the company's commitment to accurate order fulfillment and customer service. From a regulatory perspective, persistent order processing errors can lead to compliance issues, particularly concerning accurate invoicing and tax reporting. A third incorrect approach that neglects to involve end users in the risk assessment process is also professionally flawed. End users possess invaluable practical knowledge of day-to-day operations and potential pitfalls that might not be apparent to IT or management. Excluding them means overlooking critical operational risks and implementing controls that may be impractical or hinder productivity. This failure to engage stakeholders can lead to the adoption of ineffective controls and a lack of buy-in, undermining the overall risk management effort. It represents a failure in due diligence and collaborative problem-solving. The professional decision-making process for similar situations should involve a structured risk assessment framework. This begins with identifying all potential risks across the inventory and order management processes. Next, each risk should be analyzed to determine its likelihood of occurrence and its potential impact on the business. Based on this analysis, risks should be prioritized, Finally, appropriate mitigation strategies should be developed and implemented, with ongoing monitoring and review to ensure their effectiveness. Collaboration with all relevant stakeholders, including end users, IT, and management, is essential throughout this process. Question 2. The assessment process reveals that a company is experiencing challenges with inventory accuracy and order fulfillment delays due to a disorganized approach to storing raw materials and finished goods within their Oracle EBS R12 instance. They are currently using a single, large subinventory for all types of stock and have implemented locators primarily to track aisle and shelf numbers without a clear hierarchical relationship to the material type or its stage in the production process. Which of the following approaches best aligns with Oracle EBS R12 inventory and order management best practices for improving inventory control and order fulfillment? Option A. Create separate subinventories for each individual item, with locators within those subinventories representing different storage conditions, such as temperature-controlled or standard. Option B. Eliminate the use of locators altogether and rely solely on subinventories to categorize stock, assuming that subinventory names can sufficiently describe the physical storage location. Option C. Continue using a single, broad subinventory, but increase the granularity of locator definition to include detailed bin-level information for every single item, effectively creating a flat structure with extensive locator codes. Option D. Implement distinct subinventories for different material types, e.g., raw materials, work in progress, finished goods, and then define locators within each subinventory to represent specific storage locations or zones, ensuring a logical hierarchy that mirrors the physical storage and material flow. The correct answer is D. Implement distinct subinventories for different material types, e.g., raw materials, work in progress, finished goods, and then define locators within each subinventory to represent specific storage locations or zones, ensuring a logical hierarchy that mirrors the physical storage and material flow. Explanation. This scenario is professionally challenging because it requires balancing operational efficiency with adherence to established inventory management best practices within Oracle EBS R12, specifically concerning the proper utilization of subinventories and locators. Mismanagement can lead to inaccurate stock counts, increased carrying costs, and potential stockouts, impacting order fulfillment. The core of the challenge lies in ensuring that the system structure accurately reflects the physical flow and organization of inventory, which is crucial for accurate reporting and decision-making. The correct approach represents best professional practice because it aligns with the fundamental principles of inventory control and the intended functionality of Oracle EBS R12. By establishing distinct subinventories for different types of stock, e.g., raw materials, finished goods, and then further segmenting these with locators for specific storage areas, the system provides granular visibility and control. This structured approach facilitates accurate cycle counting, efficient picking and put away, and precise cost tracking, all of which are critical for maintaining inventory integrity and supporting robust order management processes. This directly supports the exam's focus on inventory and order management fundamentals by demonstrating a deep understanding of how system configuration impacts real-world operations. An incorrect approach that involves using a single, broad subinventory for all types of inventory, regardless of their nature or location, fails to leverage the system's capabilities for detailed tracking. This leads to a lack of visibility, making it difficult to identify specific stock movements, manage expiry dates effectively, or perform targeted cycle counts. Ethically, this can be seen as a failure to exercise due diligence in managing company assets, potentially leading to financial losses due to obsolescence or spoilage that could have been prevented with better organization. Another incorrect approach, using locators without a clearly defined subinventory structure, creates a disorganized system. While locators provide a physical address, without the logical grouping provided by subinventories, it becomes challenging to manage distinct inventory pools. This can lead to confusion about which stock belongs to which operational area or stage of production, hindering accurate costing and material planning. This represents a failure to implement a systematic and controlled inventory management process, which is a core tenet of professional practice in this domain. The professional reasoning process for similar situations should involve a thorough understanding of the physical inventory flow and storage strategy. Before configuring Oracle EBS R12, one must map out how materials are received, stored, moved, and issued. This physical layout and process should then be translated into the system's logical structure using subinventories and locators. Regular audits and reviews of the inventory structure are also essential to ensure it remains aligned with evolving business needs and best practices. Professionals should prioritize system configurations that enhance visibility, control, and accuracy, thereby supporting efficient operations and sound financial management. Question 3. Which approach would be most effective for improving inventory accuracy and operational efficiency within Oracle EBS R12, considering the need for continuous improvement and minimal disruption to warehouse operations? Option A. Focus cycle counting efforts exclusively on items that have experienced no stock movements in the past 6 months. Option B. Implement a continuous cycle counting program that prioritizes items based on their ABC classification, value and slash or movement frequency, with more frequent counts for items and less frequent counts for C items. Option C. Randomly select a small percentage of items each day for counting, without regard to their value or transaction history. Option D. Conduct a full physical inventory count at the end of each fiscal quarter to ensure all items are accounted for. The correct answer is B. Implement a continuous cycle counting program that prioritizes items based on their ABC classification, value and slash or movement frequency, with more frequent counts for items and less frequent counts for C items. Explanation. This scenario presents a common challenge in inventory management, balancing the need for accurate stock counts with the operational demands of a busy warehouse. The professional challenge lies in selecting a cycle counting strategy that minimizes disruption while maximizing inventory accuracy, adhering to internal controls and potentially external audit requirements. The chosen approach must be justifiable from an efficiency and accuracy perspective, aligning with best practices for inventory control within the Oracle EBS R12 framework. The correct approach represents best professional practice because it systematically addresses inventory accuracy by focusing on high-value or high-activity items. This targeted strategy, often referred to as ABC analysis, is a widely accepted best practice in inventory management. It ensures that resources are allocated efficiently, concentrating counting efforts where they will have the greatest impact on overall inventory value and potential loss due to inaccuracies. This aligns with the principles of sound financial management and operational efficiency, which are implicitly expected in professional settings utilizing systems like Oracle EBS R12. It also supports the integrity of financial reporting by ensuring that inventory valuations are based on reliable data. An incorrect approach that relies solely on random, infrequent full physical counts fails to provide timely insights into inventory discrepancies. This can lead to prolonged periods of inaccurate inventory data, impacting purchasing, sales, and production planning. It is inefficient, disruptive, and does not proactively identify or correct issues. From a regulatory or ethical standpoint, consistently operating with inaccurate inventory data could be seen as a failure of due diligence in asset management, potentially leading to misstated financial reports if inventory is a significant asset. Another incorrect approach, focusing only on counting items with low transaction volume, is counterproductive. While these items may be less critical in terms of value, their low activity might indicate a lack of oversight or potential for unnoticed shrinkage. Ignoring them in favor of more active items without a balanced strategy can create blind spots in inventory control. Ethically, all company assets, regardless of their transaction volume, require appropriate oversight. Finally, an approach that prioritizes counting items based on their physical location rather than their value or activity level, without a clear rationale, is unlikely to be efficient or effective. While physical organization is important, a cycle counting strategy should be driven by business impact. This approach lacks a strategic basis for prioritizing counting efforts and may lead to wasted resources on items that have minimal impact on the business's financial health or operational flow. It fails to demonstrate a professional, data-driven approach to inventory management. The professional decision-making process should involve understanding the business objectives for inventory accuracy, analyzing inventory data e.g., value, movement frequency, and selecting a cycle counting methodology that aligns with these objectives and available resources. This often involves a combination of strategies, such as ABC analysis, to optimize accuracy and efficiency. Regular review and adjustment of the cycle counting strategy based on performance metrics are also crucial. Question 4. The review process indicates that several newly created inventory items in Oracle EBS R12 have incomplete or inaccurate attribute assignments, leading to discrepancies in costing and sales order processing. Which of the following approaches best addresses this situation to ensure long-term data integrity and operational efficiency? Option A. Implement a temporary workaround by manually adjusting costing and sales order parameters for affected items until a permanent fix can be developed. Option B. Conduct a thorough audit of the item master data creation and maintenance workflows to identify process gaps and implement corrective actions, including enhanced user training and stricter adherence to data validation rules. Option C. Immediately correct the specific data errors for the affected items to resolve the immediate discrepancies and expedite the sales order processing. Option D. Focus on improving the technical data entry interface to make it more user-friendly, assuming that user error is the primary cause of the inaccuracies. Correct answer is B. Conduct a thorough audit of the item master data creation and maintenance workflows to identify process gaps and implement corrective actions, including enhanced user training and stricter adherence to data validation rules. Explanation. The review process indicates a potential breakdown in the established procedures for managing item master data within Oracle EBS R12. This scenario is professionally challenging because inaccurate or incomplete item master data directly impacts downstream processes such as inventory valuation, order fulfillment, and financial reporting. The integrity of the entire supply chain and financial system relies on the accuracy of this foundational data. Careful judgment is required to identify the root cause of the discrepancies and implement corrective actions that prevent recurrence, ensuring compliance with internal controls and potentially external reporting standards if applicable. The correct approach involves a systematic investigation into the item master data creation and maintenance workflows. This includes verifying that all mandatory fields are populated, that item attributes align with business requirements and any relevant industry standards or classifications, and that the approval workflow for new items is consistently followed. This represents best professional practice because it upholds data governance principles, ensures operational efficiency by providing accurate information for planning and execution, and supports reliable financial reporting. Adhering to documented procedures and controls is paramount in maintaining system integrity and preventing errors that could lead to financial misstatements or operational disruptions. An incorrect approach of simply correcting the identified data errors without investigating the underlying process failures is professionally unacceptable. This approach fails to address the root cause, making it highly probable that similar errors will recur. This can lead to a continuous cycle of data cleanup, wasting resources and eroding confidence in the system. Ethically, it represents a failure to implement robust internal controls, which could be a violation of professional responsibility to maintain accurate business records. Another incorrect approach, such as bypassing the standard item creation process for urgent requests, introduces significant risks. This bypass can lead to incomplete data, incorrect classifications, and a lack of proper authorization, all of which compromise data integrity. This is a regulatory failure if it violates internal policies designed to ensure data accuracy and compliance with financial reporting standards. It also creates an ethical dilemma by prioritizing speed over accuracy and control, potentially leading to misinformed business decisions. A third incorrect approach, focusing solely on the technical aspects of data entry without considering the business context or user training, is also flawed. Item master data is not just technical. It reflects business decisions about product categorization, costing, and sales strategies. Ignoring the business context means that even technically correct entries might be functionally wrong, leading to operational issues. This represents a failure in professional judgment by not considering the holistic impact of data management on business operations and strategic objectives. The professional decision-making process for similar situations should involve a structured problem-solving approach. First, clearly define the problem and its impact. Second, investigate the end-to-end process related to the issue, identifying all potential points of failure. Third, gather evidence to pinpoint the root cause. Fourth, Develop and evaluate potential solutions, considering their impact on data integrity, operational efficiency, and compliance. Fifth, implement the chosen solution, which should include process improvements, system configuration adjustments, and user training. Finally, establish monitoring mechanisms to ensure the problem does not recur and to continuously improve data quality. Question 5. The analysis reveals that a company is experiencing significant fluctuations in the cost of its raw materials, impacting the accuracy of its reported inventory valuation and cost of goods sold in Oracle EBS R12. Management is considering different inventory costing methods to address this issue and ensure compliance with financial reporting standards. Which of the following approaches best aligns with professional best practices for inventory valuation in this scenario, considering the need for consistent reporting and regulatory compliance within the Oracle EBS R12 framework? Option A. Relying on manual adjustments to inventory values based on perceived market changes, bypassing standard Oracle EBS R12 costing functionalities. Option B. Adopting a last-in, first-out LIFO costing method to reflect the most recent purchase prices against current sales, despite potential complexities and non-compliance with certain international standards. Option C. Utilizing a standard costing method without regular review or updates, assuming it will adequately represent actual costs despite fluctuating material prices. Option D. Implementing a weighted average cost method within Oracle EBS R12 to smooth out cost fluctuations and provide a more stable inventory valuation. The correct answer is D. Implementing a weighted average cost method within Oracle EBS R12 to smooth out cost fluctuations and provide a more stable inventory valuation. Explanation. The scenario presents a common challenge in inventory and order management, balancing the need for accurate inventory data with the operational demands of a busy warehouse. The professional challenge lies in selecting an inventory valuation method that not only complies with Oracle EBS R12's capabilities, but also aligns with sound accounting principles and regulatory requirements for financial reporting. The choice of method directly impacts the reported cost of goods sold and the value of inventory on hand, which are critical for financial statements and tax compliance. Careful judgment is required to ensure the chosen method is consistently applied and provides a true and fair view of the company's financial position. The correct approach, utilizing a weighted average cost method within Oracle EBS R12, represents best professional practice because it provides a smoothed cost that is less susceptible to significant fluctuations from individual transaction costs. This method aligns with generally accepted accounting principles, GAAP, and is widely accepted by regulatory bodies. Its consistent application simplifies inventory accounting and reporting, reducing the risk of material misstatements in financial reports. Furthermore, Oracle EBS R12's built-in functionality for weighted average cost facilitates accurate tracking and reporting, ensuring compliance with internal controls and external audit requirements. An incorrect approach of using a last-in, first-out LIFO method, while permissible under some accounting frameworks, can be problematic in practice and may not be the most appropriate choice for all businesses, especially those with rapidly changing inventory costs or a high volume of transactions. LIFO can lead to a significant mismatch between current costs and current revenues, potentially distorting profitability. Furthermore, LIFO is not permitted under International Financial Reporting Standards, IFRS, which is a critical consideration for companies operating internationally or seeking to align with global accounting standards. Relying solely on manual adjustments to correct discrepancies without a robust system in place is also a significant regulatory and ethical failure, as it introduces a high risk of error and can be seen as an attempt to manipulate financial data. The professional reasoning process for similar situations should involve a thorough understanding of the business's inventory flow, the cost structure of its goods, and the applicable accounting standards and tax regulations. It requires evaluating the capabilities of the ERP system, Oracle EBS R12 in this case, to support different valuation methods. A key step is to consult with accounting and finance professionals to determine the most appropriate method that ensures financial statement accuracy and regulatory compliance. The decision should be documented, and the chosen method consistently applied across all inventory transactions. Question 6. The efficiency study reveals that order fulfillment lead times are consistently exceeding targets, primarily due to inaccurate available-to-promise at quantities displayed in Oracle EBS R12. This inaccuracy is traced back to a pattern of discrepancies between physical inventory counts and system records. Which of the following approaches best addresses this systemic issue to ensure reliable ATP information and improve operational efficiency? Option A. Implement a rigorous cycle counting program with immediate system adjustments based on count variances, coupled with enhanced training for warehouse staff on accurate transaction recording, and a review of receiving and shipping processes to identify and rectify procedural gaps. Option B. Implement a new, complex manual reconciliation process that requires daily sign-offs from multiple supervisors for any inventory adjustments, regardless of the variance amount. Option C. Manually adjust inventory levels in Oracle EBS R12 to match physical counts whenever discrepancies are identified, without investigating the underlying causes of the variances. Option D. Focus solely on increasing the speed of picking and packing operations to compensate for delays caused by inaccurate inventory data, assuming that the system data will eventually correct itself. The correct answer is A. Implement a rigorous cycle counting program with immediate system adjustments based on count variances, coupled with enhanced training for warehouse staff on accurate transaction recording, and a review of receiving and shipping processes to identify and rectify procedural gaps. Explanation: the efficiency study reveals a significant bottleneck in the order fulfillment process, specifically related to the accuracy and timeliness of inventory transactions impacting available-to-promise quantities. This scenario is professionally challenging because it directly affects customer satisfaction, revenue, and operational costs. The core issue lies in ensuring that the system accurately reflects physical inventory, which is a fundamental tenet of inventory management. The chosen jurisdiction for this exam is implicitly US-based, as Oracle EBS R12 is a global enterprise software, and its fundamental principles align with common business practices and regulatory expectations in major markets like the US. There are no specific U.S. regulations that directly govern the internal processes of inventory transaction accuracy in the same way financial reporting is regulated. Best practices are guided by principles of operational integrity and financial stewardship, which are indirectly influenced by broader business laws and ethical standards. The correct approach emphasizes a root cause analysis of inventory transaction discrepancies. This involves investigating the processes that lead to inaccuracies, such as receiving errors, shipping errors, cycle count variances, or incorrect adjustments. Implementing robust controls, improving data entry accuracy through training and system validation, and establishing clear procedures for discrepancy resolution are paramount. This aligns with best professional practice by prioritizing data integrity, which underpins reliable order promising and efficient warehouse operations. It fosters a culture of accountability and continuous improvement, ensuring that the inventory system is a trustworthy source of information. This approach is professionally sound as it addresses the underlying systemic issues rather than merely treating symptoms. An incorrect approach would be to solely focus on adjusting inventory levels to match system data without understanding the cause of the discrepancies. This is professionally unacceptable because it masks underlying process failures. It might temporarily resolve the immediate issue of inaccurate available-to-promise quantities, but does not prevent future errors, leading to recurring problems and a lack of trust in the inventory system. This approach fails to uphold the ethical responsibility of maintaining accurate business records, which, while not directly a regulatory violation in this context, is a cornerstone of sound business management and can have indirect financial implications if not addressed. Another incorrect approach would be to blame individual employees for errors without investigating systemic issues or providing adequate training and tools. This is professionally unsound as it fosters a negative work environment and fails to address the root causes, which are often process-related. It also neglects the ethical obligation to provide employees with the necessary resources and support to perform their jobs effectively. A third incorrect approach might involve implementing overly complex or manual reconciliation processes that are not scalable or sustainable. While reconciliation is important, an inefficient process can itself become a bottleneck and introduce new errors, undermining the goal of efficiency. This approach fails to leverage the capabilities of the Oracle EBS R12 system effectively and demonstrates a lack of strategic thinking in process design. The professional decision-making process for similar situations should involve a systematic approach. First, clearly define the problem and its impact. Second, gather data to understand the scope and nature of the issue. Third, conduct a root cause analysis to identify the underlying systemic failures. Fourth, develop and implement solutions that address these root causes, prioritizing data integrity and process efficiency. Fifth, establish monitoring mechanisms to ensure the effectiveness of the implemented solutions and to identify new issues proactively. And finally, foster a culture of continuous improvement and accountability. Question 7. The efficiency study reveals a significant bottleneck in the order fulfillment process, specifically concerning the allocation of available inventory to sales orders. The current ad hoc method is leading to inconsistent customer experiences and potential revenue loss. Which of the following approaches, when implemented within Oracle EBS R12, best aligns with professional best practices for inventory allocation to sales orders? Option A. Only allocate inventory to sales orders that can be fulfilled completely, leaving partially fulfillable orders unallocated until full stock is available. Option B. Allocate available inventory randomly to any sales order that has entered the system, irrespective of its business significance or customer. Option C. Allocate inventory solely to the oldest outstanding sales orders, without considering their business value or urgency. Option D. Prioritize allocation based on a predefined business rule, such as customer tier, order value, or requested delivery date, ensuring transparency and strategic alignment. The correct answer is D. Prioritize allocation based on a predefined business rule, such as customer tier, order value, or requested delivery date, ensuring transparency and strategic alignment. Explanation. The efficiency study reveals a significant bottleneck in the order fulfillment process, specifically concerning the allocation of inventory to sales orders. This scenario is professionally challenging because it directly impacts customer satisfaction, revenue, and operational costs. The core issue lies in balancing the need for immediate order fulfillment with the strategic management of inventory to avoid stockouts or excess holding costs. Careful judgment is required to select an inventory allocation strategy that aligns with business objectives and regulatory compliance, particularly concerning order prioritization and fairness. The correct approach, prioritizing orders based on a defined business rule such as customer tier or order value, represents best professional practice. This is because it introduces a systematic and transparent method for allocation, minimizing subjective bias and ensuring that strategic business goals are met. In the context of Oracle EBS R12, this aligns with configuring order promising rules and allocation sets that reflect these business priorities. Ethically, it promotes fairness by treating high-value or strategically important customers appropriately, while still ensuring other orders are processed in a timely manner according to defined service levels. This approach is also defensible from a business perspective, as it directly supports revenue generation and customer retention strategies. An incorrect approach of randomly allocating available inventory to any waiting order fails to acknowledge the strategic importance of different customer segments or order types. This can lead to critical orders for key clients being delayed, potentially damaging business relationships and revenue streams. From a regulatory or ethical standpoint, it can be seen as unprofessional and potentially discriminatory if certain customer groups are consistently disadvantaged by the random allocation. Another incorrect approach, allocating inventory solely to the oldest outstanding orders regardless of their business impact, might seem fair on the surface, but ignores the economic realities of the business. This can lead to high-value, time-sensitive orders being delayed, impacting profitability, and potentially leading to lost sales. It fails to align with best practices in supply chain management, which emphasize optimizing for business value and strategic objectives. Finally, an incorrect approach of allocating inventory only to orders that can be fulfilled in their entirety, leaving partially fulfillable orders waiting indefinitely, can lead to significant customer dissatisfaction and lost sales opportunities. While it might simplify inventory management by avoiding partial shipments, it is not a best practice for customer service or revenue maximization. This approach can also create an artificial scarcity of inventory for customers who might otherwise accept partial shipments, leading to inefficiencies in the overall supply chain. Professionals should employ a decision-making framework that begins with understanding the business objectives and customer service level agreements. This involves analyzing the impact of different allocation strategies on key performance indicators such as order fulfillment rates, customer satisfaction, and inventory turnover. The chosen strategy should be configurable within the Oracle EBS R12 system and regularly reviewed for effectiveness. This process ensures that inventory allocation is not just an operational task, but a strategic lever for business success. Question 8. During the evaluation of a significant discrepancy between the on-hand quantity of a high-value item in Oracle EBS R12 and its physical count, what is the most professionally sound approach to resolve the issue and prevent future occurrences? Option A. Defer the investigation and adjustment until the next scheduled full physical inventory to minimize disruption to daily operations. Option B. Immediately adjust the system quantity to match the physical count and initiate a review of the receiving process for that item. Option C. Blame the warehouse personnel responsible for the item's handling and implement stricter individual performance monitoring without investigating the underlying process. Option D. Conduct a cycle count for the specific item to verify the physical count, analyze the discrepancy against system transactions, and implement corrective actions based on the findings. Correct answer is B. Immediately adjust the system quantity to match the physical count and initiate a review of the receiving process for that item. Explanation. This scenario presents a common challenge in Oracle EBS R12 inventory and order management, ensuring data integrity and operational efficiency when dealing with discrepancies between physical inventory and system records. The professional challenge lies in identifying the root cause of the discrepancy and implementing a sustainable solution that aligns with best practices and regulatory compliance without disrupting ongoing operations or compromising financial accuracy. Careful judgment is required to balance immediate corrective actions with long-term process improvements. The correct approach represents best professional practice because it prioritizes a systematic, data-driven investigation. By initiating a cycle count for the specific item, the team directly addresses the suspected discrepancy with minimal disruption. The subsequent analysis of the count results against system records allows for precise identification of the error's origin. Implementing corrective actions based on this analysis, such as adjusting system quantities and investigating the process that led to the error, e.g., receiving, shipping, or internal movements, ensures that the issue is not only resolved but also prevented from recurring. This methodical approach upholds the integrity of inventory data, which is crucial for accurate financial reporting, efficient order fulfillment, and informed decision-making, all of which are implicitly governed by standard business practices and potentially by financial regulations requiring accurate asset valuation. An incorrect approach that immediately suggests a blanket system-wide adjustment without investigation is professionally unacceptable. This fails to identify the root cause, potentially masking underlying process flaws and leading to recurring discrepancies. It also risks inaccurate financial reporting by making arbitrary adjustments to inventory valuation without proper substantiation, which could violate financial reporting standards. Another incorrect approach, focusing solely on blaming individuals without a process review, is also professionally unsound. This fosters a negative work environment, discourages open communication about errors, and fails to address systemic issues that might be contributing to the problem. It also neglects the opportunity to improve operational processes. A third incorrect approach, delaying the investigation until the next physical inventory, is professionally negligent. This allows inaccurate data to persist, impacting order fulfillment, customer satisfaction, and potentially leading to stockouts or overstock situations, all of which have significant business and financial implications. A professional reasoning process for similar situations should involve a structured problem-solving methodology. First, clearly define the problem and its impact. Second, gather relevant data and evidence. Third, analyze the data to identify the root cause. Fourth, develop and evaluate potential solutions, considering their impact on operations, data integrity, and compliance. Fifth, implement the chosen solution and monitor its effectiveness. Finally, document the process and lessons learned to prevent recurrence. This systematic approach ensures that decisions are informed, justifiable, and aligned with professional standards and organizational objectives. Question 9. The monitoring system demonstrates that a significant volume of inventory is being transferred between two distinct operating units within the same Oracle EBS R12 instance. However, the receiving operating unit's inventory records are consistently showing discrepancies in quantity and value compared to the shipping operating unit's confirmed shipments, leading to delays in order fulfillment for the receiving unit. What is the most appropriate approach to resolve this interorganization transfer issue, ensuring accurate inventory valuation and availability? Option A. Manually adjust the inventory quantity and value at the receiving organization to match the shipped quantities, bypassing the standard receipt process. Option B. Rely solely on the shipment confirmation in Oracle EBS R12 for the interorganization transfer, assuming the inventory is accounted for once it leaves the shipping organization. Option C. Implement a standard interorganization transfer process that utilizes intercompany sales orders and receipts, ensuring that the transfer is treated as a sale from the shipping organization to the receiving organization. Option D. Utilize a miscellaneous transaction at the shipping organization to reduce inventory, and a miscellaneous transaction at the receiving organization to increase inventory, without establishing a formal transfer order. Correct answer is C. Implement a standard interorganization transfer process that utilizes intercompany sales orders and receipts, ensuring that the transfer is treated as a sale from the shipping organization to the receiving organization. Explanation: this scenario presents a common implementation challenge in Oracle EBS R12 inventory and order management, ensuring data integrity and process efficiency when dealing with interorganization transfers. The professional challenge lies in balancing the speed of transaction processing with the accuracy of inventory valuation and availability across different operating units. Mismanagement can lead to discrepancies, impacting financial reporting, customer order fulfillment, and operational planning. Careful judgment is required to select the most appropriate transfer method that aligns with business requirements and Oracle's best practices. The correct approach represents best professional practice because it leverages Oracle EBS R12's built-in functionality for interorganization transfers, specifically the intercompany sales order flow. This method ensures that the transfer is treated as a sale from the shipping organization to the receiving organization, triggering appropriate accounting entries in both. It maintains accurate inventory valuation at the receiving organization and ensures that the goods are reflected as available for sale once received. This aligns with the fundamental principles of inventory management and financial accounting, ensuring compliance with standard business practices and the integrity of the Oracle system's transactional flow. An incorrect approach that involves manually adjusting inventory at the receiving organization without a corresponding sales order or receipt transaction is professionally unacceptable. This bypasses critical accounting controls and leads to inaccurate inventory records. It violates the principle of auditable transactions, making it difficult to reconcile inventory balances and potentially leading to misstatements in financial reports. Ethically, it represents a failure to maintain accurate financial records. Another incorrect approach, such as using a simple, miscellaneous transaction to move inventory, fails to recognize the sale and receipt aspects of an interorganization transfer. While it might move the quantity, it does not generate the necessary accounting for the sale or the receipt, leading to valuation discrepancies and an incomplete audit trail. This demonstrates a lack of understanding of the system's integrated nature and its impact on financial reporting. A third incorrect approach, relying solely on shipment confirmation without subsequent receipt processing in the receiving organization, leaves the inventory in transit indefinitely and does not reflect its actual availability or ownership at the destination. This creates significant operational and financial reporting issues, as the receiving organization cannot utilize or account for the inventory. The professional reasoning process for similar situations involves 1. Clearly defining the business requirement for the inventory movement, e.g., is it a sale, a stock transfer, a return? 2. Understanding the implications of each transaction type within Oracle EBS R12, particularly regarding inventory valuation, accounting, and order management. 3. Evaluating the available Oracle functionalities that best map to the business requirement, considering factors like automation, auditability, and integration with other modules. 4. Selecting the method that ensures data integrity, financial accuracy, and operational efficiency, adhering to established accounting principles and system best practices. Question 10. Benchmark analysis indicates that a global manufacturing company is struggling with inconsistent inventory valuation across its multiple production facilities and distribution centers. The company is implementing Oracle EBS R12 and needs to select a costing method that provides accurate financial reporting and supports efficient inventory management. The implementation timeline is aggressive, and there is pressure to go live quickly. Which of the following approaches best balances the need for accuracy, operational efficiency, and regulatory compliance in this scenario? Option A. Implement a phased rollout of standard costing, beginning with a pilot group of high-volume items and gradually expanding to other item categories and sites, allowing for thorough testing and validation at each stage. Option B. Utilize backflush costing for all manufactured items, assuming that bill of materials accuracy will be addressed post-implementation. Option C. Select FIFO costing for all inventory items to ensure that the oldest costs are expensed first, aligning with a conservative financial reporting approach. Option D. Immediately implement weighted average costing across all items and all locations to simplify management and achieve rapid deployment. Correct answer is A. Implement a phased rollout of standard costing, beginning with a pilot group of high-volume items and gradually expanding to other item categories and sites, allowing for thorough testing and validation at each stage. Explanation. Scenario analysis. This scenario presents a common implementation challenge in Oracle EBS R12 inventory and order management, balancing the need for accurate inventory valuation with the operational efficiency of a large, multi-site organization. The core difficulty lies in selecting an appropriate costing method that aligns with business needs, regulatory compliance, and system capabilities. The pressure to implement quickly without fully understanding the long-term implications of the chosen costing method creates a professional challenge requiring careful judgment and a thorough understanding of the system's impact on financial reporting and operational processes. Correct approach analysis. The correct approach involves a phased implementation of a standard costing method, starting with a pilot group of high-volume items and gradually expanding. This represents best professional practice because it allows for thorough testing and validation of the costing methodology in a controlled environment before a full rollout. Standard costing, when properly managed, provides a stable cost base for valuation and variance analysis, which is crucial for accurate financial reporting and inventory control. This approach minimizes the risk of widespread errors in inventory valuation and operational disruption. It also aligns with the principles of good financial management and internal controls, ensuring that financial data is reliable and auditable, which is a fundamental regulatory expectation for financial reporting. Incorrect approaches analysis. Implementing a weighted average costing method across all items and sites simultaneously without adequate testing is professionally unacceptable. While weighted average costing can be simpler to manage in some scenarios, a rushed implementation without proper validation can lead to significant inaccuracies in inventory valuation, especially if there are frequent price fluctuations or complex intersite transfers. This could result in misstated financial reports, potentially violating accounting standards and leading to audit issues. Choosing a FIFO, first in, first out, costing method for all items without considering the operational complexity and potential for inventory obsolescence is also professionally unsound. FIFO can be difficult to manage in high-volume, fast-moving inventory environments and may not accurately reflect the true cost of goods sold if purchase prices vary significantly. This can lead to distorted profitability figures and make cost control challenging, again, impacting the reliability of financial reporting. Finally, opting for a backflush costing method for all items without a detailed analysis of the bill of materials BOM, accuracy and production processes is a significant risk. Backflush costing relies heavily on accurate BOMs and routing data. If these are not meticulously maintained, it can lead to substantial discrepancies between actual material usage and system-recorded costs, causing severe inventory valuation errors and undermining the integrity of financial data. This lack of due diligence in ensuring system data accuracy is a direct failure in professional responsibility and can lead to regulatory non-compliance due to inaccurate financial reporting. Professional reasoning. Professionals should approach such implementation challenges by first conducting a comprehensive business process analysis to understand current inventory and costing practices, as well as future requirements. This should be followed by a detailed evaluation of Oracle EBS R12's costing options, considering their impact on financial reporting, operational efficiency, and regulatory compliance. A risk assessment should be performed for each potential costing method. The decision should be data-driven, involving key stakeholders from finance, operations, and IT. A phased rollout with rigorous testing and validation is generally the most prudent approach to mitigate risks and ensure successful implementation. This systematic process ensures that the chosen solution aligns with business objectives and adheres to professional and regulatory standards. Question 11. Regulatory review indicates that during a recent Oracle EBS R12 upgrade, significant discrepancies were identified between the legacy system's on-hand quantities and item costs, and the data migrated to the new R12 inventory module. The project team is under pressure to meet the go-live date. What is the most appropriate and compliant approach to address these data discrepancies? Option A. Manually adjust the on-hand quantities and item costs directly within the R12 system to match the legacy system's figures without a formal reconciliation process. Option B. Overwrite the data in the R12 system with the data from the legacy system, assuming the legacy data is the definitive source of truth, and defer any further investigation. Option C. Proceed with the go-live using the migrated data, and plan to address the identified discrepancies through manual adjustments in the R12 system after the system is live. Option D. Conduct a comprehensive data reconciliation between the legacy and R12 systems. Identify the root causes of discrepancies, and utilize EBS R12's costing and inventory management tools to correct and validate the data before go-live. Correct answer is D. Conduct a comprehensive data reconciliation between the legacy and R12 systems. Identify the root causes of discrepancies, and utilize EBS R12's costing and inventory management tools to correct and validate the data before go-live. Explanation. Scenario analysis. This scenario presents a common implementation challenge in Oracle EBS R12 inventory and order management, ensuring data integrity and compliance during a critical system upgrade. The challenge lies in balancing the urgency of go-live with the necessity of adhering to established data governance policies and regulatory requirements for accurate inventory valuation and order fulfillment. A rushed or incomplete data migration can lead to significant financial misstatements, operational disruptions, and potential regulatory penalties. The professional challenge is to identify the root cause of the data discrepancies and implement a robust, compliant solution without compromising the project timeline or system integrity. Correct approach analysis. The correct approach involves a systematic, phased reconciliation process. This begins with a thorough audit of the source system data against the target EBS R12 environment, identifying specific discrepancies in item costs and on-hand quantities. The next step is to leverage EBS R12's built-in costing and inventory management functionalities, such as the cost management module and inventory valuation reports, to re-establish accurate cost data. This might involve running cost updates, performing cycle counts, and adjusting inventory levels based on the audit findings. This approach is best professional practice because it directly addresses the data integrity issues using the system's intended features, ensuring compliance with inventory valuation principles and regulatory reporting standards. It prioritizes accuracy and auditability, which are paramount in financial and operational management. Incorrect approach is analysis. One incorrect approach is to simply overwrite the discrepancies in the target EBS R12 system with the data from the legacy system, without understanding the cause of the differences. This is professionally unacceptable because it ignores the potential for systemic errors in either the legacy system or the migration process, perpetuating inaccuracies and failing to meet regulatory requirements for accurate financial reporting. It bypasses the necessary validation and reconciliation steps, leading to unreliable inventory valuation and potentially fraudulent financial statements. Another incorrect approach is to proceed with the go-live while flagging the discrepancies for post-implementation correction. This is professionally unsound, as it knowingly introduces inaccurate data into a live financial system. This can lead to immediate operational issues, incorrect order pricing and fulfillment, and significant challenges in subsequent financial audits. It violates the principle of data integrity from the outset and exposes the organization to regulatory scrutiny and potential penalties for inaccurate financial reporting. A third incorrect approach is to rely solely on manual adjustments in the EBS R12 system without a clear audit trail or documented reconciliation process. While manual adjustments might seem like a quick fix, they lack the rigor required for compliance. Without proper documentation and validation, these adjustments can be difficult to audit, leading to questions about the accuracy of inventory valuation and potentially violating accounting standards and regulatory requirements for transparency and accountability. Professional reasoning. Professionals facing such a scenario should adopt a structured problem-solving approach. First, clearly define the scope of the data discrepancy and its potential impact. Second, engage relevant stakeholders, including IT, finance, and operations, to understand the root cause. Third, leverage the capabilities of Oracle EBS R12 for data validation and correction, adhering to established data governance policies. Fourth, document all reconciliation steps and adjustments meticulously to ensure auditability and compliance. Finally, obtain sign-off from relevant parties before proceeding with critical system changes or go live. This systematic process ensures that data integrity is maintained, regulatory requirements are met, and the organization operates on accurate financial and operational information. Question 12. Operational review demonstrates that the migration of historical inventory data from a legacy system to Oracle EBS R12 is nearing completion, but significant discrepancies have been noted between the legacy system's reported on-hand quantities and initial physical counts performed in the new system. The project team is under pressure to meet a strict go-live deadline, which approach best balances the need for a timely go-live with the imperative of data accuracy and operational integrity. Option A. Implement a phased data migration strategy, performing incremental loads of inventory data with rigorous validation and reconciliation checks at each stage before proceeding to the next, and conduct a final reconciliation post-go-live for any residual minor discrepancies. Option B. Halt the migration process. Conduct a full data cleansing and remigration of all inventory data, and delay the go-live until absolute data parity is achieved between the legacy and new systems. Option C. Proceed with the go-live using the migrated data as is, and plan for a comprehensive inventory reconciliation and adjustment process immediately post-go-live to correct any discrepancies. Option D. Manually adjust the inventory quantities in the new Oracle EBS R12 system to match the initial physical counts, without investigating the root cause of the discrepancies in the migrated data. The correct answer is C. Proceed with the go-live using the migrated data as is, and plan for a comprehensive inventory reconciliation and adjustment process immediately post-go-live to correct any discrepancies. Explanation. Scenario analysis. This scenario presents a common implementation challenge in Oracle EBS R12 inventory and order management, ensuring data integrity and operational efficiency when migrating from a legacy system. The challenge lies in balancing the need for a quick go-live with the imperative to accurately reflect historical inventory data, which directly impacts order fulfillment and financial reporting. Failure to address this accurately can lead to stockouts, incorrect backorders, and financial discrepancies, all of which have significant business and potential regulatory implications. Correct approach analysis. The correct approach, which involves a phased data migration with rigorous validation at each stage, represents best professional practice because it prioritizes accuracy and minimizes risk. This method aligns with fundamental accounting principles and internal control best practices, ensuring that financial statements accurately reflect inventory on hand. In a regulated environment, this meticulous approach is crucial for demonstrating due diligence and compliance with financial reporting standards. It allows for the identification and correction of data discrepancies before they impact live transactions, thereby safeguarding operational continuity and financial integrity. Incorrect approaches analysis. One incorrect approach involves a direct, bulk data import without intermediate validation. This is professionally unacceptable because it bypasses critical data integrity checks. It significantly increases the risk of introducing errors from the legacy system into the new EBS environment. Such errors could lead to inaccurate inventory counts, incorrect pricing, and flawed order promising, potentially violating internal controls and leading to misstated financial reports. Ethically, It demonstrates a lack of diligence in ensuring the accuracy of financial data. Another incorrect approach is to defer the reconciliation of historical inventory data until after the go-live. This is professionally unsound as it introduces significant operational risk. Live orders will be processed based on potentially inaccurate data, leading to customer dissatisfaction, lost sales, and increased costs associated with rectifying errors. From a regulatory perspective, it can be seen as a failure to maintain accurate financial records, which could have implications for audits and compliance. A third incorrect approach is to manually adjust inventory levels post-migration to match physical counts without understanding the root cause of discrepancies. While seemingly addressing the immediate problem, this approach fails to identify and rectify the underlying data migration issues. It is a reactive measure that does not prevent future errors and can mask systemic problems within the data migration process itself. This lack of root cause analysis is a failure in professional problem solving and can lead to recurring issues, undermining the reliability of the inventory management system. Professional reasoning. Professionals facing such implementation challenges should adopt a structured, risk-based approach. This involves 1. Thorough data profiling and cleansing of the legacy system before migration. 2. Developing a detailed data migration plan with clear validation checkpoints. 3. Performing incremental data loads and validating each batch against source data and business rules. 4. Conducting user acceptance testing, UAT, with a focus on inventory accuracy and order fulfillment scenarios. 5. Establishing a clear rollback strategy in case of critical migration failures. 6. Ensuring comprehensive documentation of the migration process and validation results. This systematic process ensures data integrity, minimizes operational disruption, and upholds professional standards for accuracy and reliability in financial and operational systems. Question 13. Stakeholder feedback indicates a strong desire to begin processing sales orders immediately, even though the complete definition and validation of all unit of measure, UM, conversions for newly created items are still pending. The business unit argues that they can manually track and adjust quantities in spreadsheets for now and address the UOM setup later. What is the most professionally responsible approach to ensure data integrity and system compliance within Oracle EBS R12 inventory and order management? Option A. Prioritize processing sales orders for items with defined UOMs and allow manual overrides for items with pending UOM configurations, with a plan to update the item master later. Option B. Proceed with sales order processing, relying on manual tracking and spreadsheet adjustments for UOM discrepancies, and defer the complete UOM setup to a post-go-live phase. Option C. Halt sales order processing until all item master UOM conversions are fully defined, validated, and configured within Oracle EBS, ensuring accurate system-wide data from the outset. Option D. Implement a temporary UOM conversion workaround within the sales order entry screen that requires manual input for each transaction, bypassing the item master UOM setup for now. The correct answer is B. Proceed with sales order processing, relying on manual tracking and spreadsheet adjustments for UOM discrepancies, and defer the complete UOM setup to a post-go-live phase. Explanation. Scenario analysis. This scenario presents a common implementation challenge where a perceived need for immediate functionality clashes with the established best practices and regulatory compliance requirements within Oracle EBS R12 inventory and order management. The challenge lies in balancing the urgency of business operations with the need for robust, auditable, and compliant processes. Stakeholders, driven by operational pressures, may advocate for shortcuts that bypass critical setup steps, potentially leading to data integrity issues, inaccurate reporting, and non-compliance with internal controls and potentially external regulations if applicable to the specific business context. Though for this exam, we focus on the system's inherent design and best practices as the regulatory framework. The pressure to deliver quickly can obscure the long-term consequences of neglecting foundational setup. Correct approach analysis. The correct approach, which involves thoroughly documenting and validating all item master attributes, including unit of measure conversions, before proceeding with transaction processing, represents best professional practice. This aligns with the principles of data governance and system integrity inherent in Oracle EBS. Accurate unit of measure conversions are fundamental to correct inventory valuation, costing, sales order fulfillment, and purchasing. Failing to establish these correctly from the outset leads to cascading errors throughout the supply chain. This approach ensures that the system operates on a foundation of accurate data, which is crucial for reliable reporting, decision-making, and auditability. It adheres to the garbage in, garbage out principle by ensuring high-quality input data. Incorrect approaches analysis. Proceeding with transaction processing without fully defining and validating unit of measure conversions is a significant regulatory and ethical failure within the context of system implementation and data management. It violates the implicit regulation of maintaining data integrity and system accuracy. This approach creates a high risk of financial misstatement due to incorrect inventory valuation and costing. It also undermines the auditability of transactions, as the system will not be able to accurately track quantities across different units of measure. Furthermore, it can lead to operational inefficiencies and customer dissatisfaction due to incorrect order fulfillment and shipping quantities. Another incorrect approach would be to implement a workaround solution that manually adjusts quantities during transactions without correcting the underlying item master setup. This is professionally unacceptable as it creates an unsustainable and error-prone process. It bypasses the system's intended functionality and introduces significant manual effort, increasing the likelihood of human error. This approach fails to address the root cause of the problem and creates a technical debt that will need to be resolved later, likely at a higher cost and with greater disruption. It also compromises the integrity of historical data. A third incorrect approach would be to defer the complete setup of unit of measure conversions to a later phase, assuming it can be fixed post-go live. This is a failure of professional planning and risk management. While some minor adjustments might be permissible in a phased rollout, critical foundational elements like UOM conversions should be addressed before live transactions commence. This approach risks introducing significant data corruption and operational chaos during the critical initial period of system usage, making it far more difficult and costly to rectify than addressing it upfront. It demonstrates a lack of foresight and a disregard for the interconnectedness of system modules. Professional reasoning. Professionals should adopt a structured approach to system implementation, prioritizing foundational data integrity and configuration. This involves a thorough understanding of business requirements, mapping them to system functionalities, and adhering to established best practices for data setup. When faced with stakeholder pressure for expediency, the decision-making process should involve 1. Clearly articulating the risks and consequences of bypassing critical setup steps, referencing potential impacts on data accuracy, financial reporting, and operational efficiency. 2. Educating stakeholders on the importance of foundational data integrity for long-term system success and compliance. 3. Proposing a realistic timeline that accommodates necessary configuration and validation, potentially identifying non-critical items that can be deferred if absolutely necessary, but never core setup elements like UOM conversions. 4. Documenting all decisions and the rationale behind them, ensuring transparency and accountability. 5. Escalating concerns to project management or executive sponsors if stakeholder pressure leads to decisions that compromise system integrity or compliance. Question 14. Implementation of a new complex pricing strategy for a diverse product catalog within Oracle EBS R12 requires careful consideration of the rollout approach to minimize business disruption and ensure accuracy. Which of the following approaches best mitigates risk and ensures data integrity during this critical phase? Option A. Direct modification of existing price lists without a comprehensive impact analysis or testing. Option B. Sole reliance on end-user feedback during the implementation without a structured testing and validation process. Option C. A phased rollout, beginning with a pilot group of products and customer segments, allowing for thorough testing and validation before a full deployment. Option D. A simultaneous Big Bang implementation across all products and customer segments to expedite the process. The correct answer is C. A phased rollout, beginning with a pilot group of products and customer segments, allowing for thorough testing and validation before a full deployment. Explanation. Scenario analysis. Implementing a new pricing strategy within Oracle EBS R12 for a complex product catalog presents a significant challenge. The core difficulty lies in ensuring that the new pricing rules accurately reflect business objectives, while maintaining data integrity and compliance with established business processes. Misconfiguration can lead to incorrect customer billing, revenue leakage, and operational inefficiencies. The need to balance flexibility with control is paramount, especially when dealing with a large volume of SKUs and diverse customer agreements. Correct approach analysis. The correct approach involves a phased implementation strategy, starting with a pilot group of products and customer segments. This allows for thorough testing and validation of the new pricing rules in a controlled environment before a full rollout. It aligns with best practices for system changes by minimizing risk and providing opportunities for iterative refinement. This methodical approach ensures that the pricing engine functions as intended, preventing widespread errors and maintaining customer trust, which is a fundamental ethical consideration in business transactions. It also allows for early detection of any unintended consequences on downstream processes like order fulfillment and invoicing, ensuring regulatory compliance regarding accurate financial reporting. Incorrect approaches analysis. Implementing the new pricing strategy across all products and customer segments simultaneously without prior testing is a significant regulatory and ethical failure. This Big Bang approach carries an unacceptably high risk of widespread errors, leading to incorrect invoicing and potential financial misstatements, which could violate financial reporting regulations. It demonstrates a lack of due diligence and a disregard for the potential negative impact on customers and the business's financial health. Attempting to implement the pricing changes by directly modifying existing price lists without a clear understanding of the impact on historical data or other dependent pricing attributes is also professionally unacceptable. This can lead to data corruption and inconsistencies, making it difficult to audit pricing decisions and potentially violating data integrity standards. It also bypasses proper change management procedures, which are often implicitly or explicitly required by internal controls and external audit requirements. Relying solely on end-user feedback during the implementation without a structured testing and validation process is another failure. While user feedback is valuable, it cannot replace systematic testing to ensure the pricing engine's accuracy and adherence to business rules. This approach risks overlooking critical configuration errors that may not be immediately apparent to users but have significant financial or compliance implications. It demonstrates a lack of professional rigor in system implementation. Professional reasoning. Professionals should approach system implementation, especially those impacting financial data like pricing, with a risk-based methodology. This involves identifying potential failure points, assessing their impact, and developing mitigation strategies. A phased rollout, robust testing protocols, including unit, integration, and user acceptance testing, and thorough documentation are essential. Understanding the interdependencies within Oracle EBS, such as how pricing impacts order entry, shipping, and invoicing, is crucial for a successful and compliant implementation. Always prioritize data accuracy, system integrity, and adherence to business policies and regulatory requirements. Question 15. Governance review demonstrates a critical customer order is ready for shipment, but the goods have not yet been formally received into Oracle EBS R12 inventory. The warehouse team is under pressure to fulfill this order immediately to avoid customer dissatisfaction. What is the most appropriate action to take to ensure both operational efficiency and data integrity? Option A. Manually adjust the inventory quantity to reflect the customer order, bypassing the physical receipt. Option B. Receive the goods into inventory using the standard receiving process, then allocate and ship them to the customer. Option C. Directly allocate the goods from the supplier shipment to the customer order without completing the inventory receipt transaction. Option D. Expedite the physical receipt by skipping quality checks and documentation to speed up the process. Correct answer is B. Receive the goods into inventory using the standard receiving process, then allocate and ship them to the customer. Explanation. Scenario analysis. This scenario presents a conflict between the immediate need to fulfill a critical customer order and the established inventory management procedures designed to ensure data integrity and accurate stock levels. The challenge lies in balancing operational urgency with adherence to governance principles, particularly when a deviation might seem like a quick fix but could have downstream consequences. The pressure from a key customer adds an ethical dimension, requiring a decision that upholds both business relationships and internal controls. Correct approach analysis. The correct approach prioritizes maintaining the integrity of inventory data by following the established process for receiving and transacting inventory. This aligns with the fundamental principles of inventory management and Oracle EBS R12, which rely on accurate transactional data for all subsequent processes, including order fulfillment, costing, and financial reporting. By ensuring the goods are properly received into inventory before being allocated to the sales order, the system reflects the true state of stock, preventing potential stockouts, incorrect costing, and inaccurate demand planning. This adherence to process is a cornerstone of good governance and operational control, ensuring reliability and auditability. Incorrect approaches analysis. One incorrect approach involves directly allocating the goods from the supplier shipment to the customer order without a formal receipt into inventory. This bypasses the crucial receiving transaction, meaning the system will not record the physical arrival of the goods. This leads to inaccurate inventory on hand, potential discrepancies between physical stock and system stock, and incorrect cost of goods sold calculations. It violates the principle of transactional integrity, making it difficult to audit inventory movements and potentially leading to financial misstatements. Another incorrect approach is to manually adjust the inventory quantity to reflect the customer order without a corresponding physical receipt. This is a form of data manipulation that masks the true inventory status. It creates a false sense of stock availability and can lead to further operational issues if the physical goods are not actually present. This approach undermines the audit trail and erodes trust in the inventory system's accuracy. A third incorrect approach is to expedite the physical receipt of the goods by skipping certain quality checks or documentation steps, while seemingly addressing the urgency. This compromises the accuracy and completeness of the receiving process. Inaccurate receiving data can lead to issues with supplier reconciliation, quality control, and traceability, all of which are critical for effective inventory management and compliance. Professional reasoning. Professionals should employ a decision-making framework that first assesses the impact of any proposed deviation on data integrity and downstream processes. It should then evaluate whether the urgency justifies a temporary workaround, and if so, ensure that any workaround is documented, approved, and followed by a corrective action to bring the system back into alignment with reality. In this case, the best practice is to follow the established Oracle EBS R12 receiving process, even if it requires a brief delay, to ensure data accuracy and maintain robust internal controls. If the delay is truly critical, the professional should escalate the issue to management to explore authorized exceptions or expedited processing within the system's capabilities, rather than circumventing established procedures. Question 16. The risk matrix shows a high probability of customer dissatisfaction and potential regulatory noncompliance if sales representatives misrepresent the functional capabilities of Oracle EBS R12 modules. A key prospect has expressed concerns about the system's ability to handle their specific, complex inventory valuation methods, and the sales representative is aware that the standard R12 functionality has limitations in this area, which would require significant customization or a third-party add-on. The sales representative is under significant pressure to close this deal before the end of the quarter. What is the most ethically and professionally sound approach? Option A. Focus solely on the benefits of other Oracle EBS R12 modules that are not directly related to inventory valuation, hoping the prospect will overlook the limitations in this specific area. Option B. Assure the prospect that Oracle EBS R12 can handle their complex inventory valuation methods with minor configuration adjustments, downplaying the need for extensive customization or add-ons to secure the sale. Option C. Clearly explain the current limitations of Oracle EBS R12 standard functionality regarding the specific inventory valuation methods, outline the potential need for customization or add-ons, and discuss the associated costs and timelines, allowing the prospect to make an informed decision. Option D. Promise the prospect that a forthcoming R12 patch, scheduled for release next year, will fully address their complex inventory valuation needs, without confirming the exact features or release date. Correct answer is C. Clearly explain the current limitations of Oracle EBS R12 standard functionality regarding the specific inventory valuation methods, outline the potential need for customization or add-ons, and discuss the associated costs and timelines, allowing the prospect to make an informed decision. Explanation. Scenario analysis. This scenario presents an ethical dilemma where a sales representative, under pressure to meet targets, is tempted to misrepresent product capabilities to secure a sale. The challenge lies in balancing the immediate business objective of closing a deal with the long-term ethical and regulatory obligations to provide accurate information. The risk matrix highlights the potential for reputational damage and regulatory scrutiny if such practices are discovered. Correct approach analysis. The correct approach involves prioritizing honesty and transparency. This aligns with fundamental ethical principles of business conduct and the implicit regulatory expectation that sales representations are truthful and not misleading. In the context of Oracle EBS R12 inventory and order management, accurate product information is crucial for customers to make informed purchasing decisions, which in turn impacts their ability to effectively use the system, manage inventory, and process orders. Misrepresenting capabilities can lead to customer dissatisfaction, returns, and potential disputes, all of which have financial and operational repercussions. Adhering to truthful representation upholds the integrity of the sales process and builds customer trust, which is a cornerstone of sustainable business relationships. Incorrect approaches analysis. One incorrect approach involves exaggerating the capabilities of the Oracle EBS R12 modules to meet the immediate sales target. This is ethically unsound as it constitutes a misrepresentation of facts. From a regulatory perspective, depending on the jurisdiction and the nature of the exaggeration, this could be considered deceptive trade practice, leading to potential legal ramifications and fines. It violates the principle of fair dealing with customers. Another incorrect approach is to remain silent about known limitations of the Oracle EBS R12 modules that are relevant to the customer's stated needs, while still pushing for the sale. This is a form of omission that can be as misleading as outright exaggeration. Ethically, it fails to provide a complete picture, preventing the customer from making a fully informed decision. Regulatory frameworks often require disclosure of material information that could influence a purchasing decision. A third incorrect approach is to suggest that a future, unreleased patch or upgrade will resolve the current limitations, without concrete evidence or a confirmed release date. This is speculative and potentially deceptive. It shifts the burden of the product's current shortcomings onto a future promise, which may or may not materialize as expected, leading to customer disappointment and potential breach of implied warranty. Professional reasoning. Professionals should adopt a decision-making process that begins with identifying the ethical and regulatory implications of any proposed action. This involves consulting company policies on sales conduct and ethical guidelines. When faced with pressure to deviate from truthful representation, the professional should first seek to understand the customer's true needs, and then honestly assess whether the current Oracle EBS R12 offering can meet those needs. If there are gaps, the professional should clearly communicate these limitations and explore alternative solutions or configurations that are genuinely available. Escalating concerns to management for guidance on how to handle situations where product capabilities do not fully align with customer expectations is also a critical step. The ultimate goal is to foster long-term, trust-based relationships rather than achieving short-term gains through deceptive means. Question 17. Governance review demonstrates that a critical customer order, requiring a significant quantity of a specific item, cannot be fulfilled immediately due to a reported discrepancy between the system's on-hand quantity and the physical count. The inventory manager is under immense pressure from sales to expedite the order, and a proposed solution involves manually adjusting the system's on-hand quantity to match the physical count without a formal stock adjustment transaction. What is the most appropriate course of action for the inventory manager to ensure both customer satisfaction and adherence to sound inventory management principles within Oracle EBS R12? Option A. Advise the customer that a partial shipment is possible and promise to backorder the remaining items without confirming system availability or initiating the correct backorder process. Option B. Manually update the on-hand quantity in Oracle EBS R12 to reflect the physical count, and then proceed with fulfilling the order. Option C. Initiate a formal stock adjustment transaction in Oracle EBS R12, documenting the reason for the discrepancy and the corrective action, and then fulfill the order. Option D. Fulfill the order from a different, unallocated location without updating the system's on-hand quantity for the original item. The correct answer is C. Initiate a formal stock adjustment transaction in Oracle EBS R12, documenting the reason for the discrepancy and the corrective action, and then fulfill the order. Explanation. Scenario analysis. This scenario presents a conflict between immediate business needs and established inventory management procedures. The pressure to fulfill a large, time-sensitive order creates an ethical dilemma for the inventory manager. The challenge lies in balancing the urgency of the customer's request with the integrity of inventory data and the potential for downstream errors if procedures are bypassed. This requires careful judgment to avoid compromising operational efficiency and financial accuracy. Correct approach analysis. The correct approach prioritizes adherence to established Oracle EBS R12 inventory management processes. This aligns with best professional practice because it ensures data integrity, maintains audit trails, and prevents potential discrepancies in inventory valuation and stock levels. Following the documented procedure for a stock adjustment, even under pressure, upholds the principles of accurate record keeping and responsible inventory control, which are fundamental to sound business operations and regulatory compliance within the Oracle EBS R12 framework. Incorrect approaches analysis. Bypassing the standard stock adjustment process and manually updating the on-hand quantity in Oracle EBS R12 without proper documentation or approval is a direct violation of internal controls and potentially regulatory guidelines related to financial reporting and inventory accuracy. This creates an unreliable inventory record, which can lead to incorrect purchasing decisions, stockouts, or overstocking, and can mask potential shrinkage or errors. Fulfilling the order by issuing inventory from a different, unallocated location without updating the system is equally problematic. This leads to a discrepancy between the physical inventory and the system's record, making it impossible to accurately track stock movements, perform cycle counts, or conduct physical inventories. This lack of traceability can have significant implications for inventory valuation and can obscure issues like theft or damage. Suggesting the customer accept a partial shipment and promising to backorder the remaining items without confirming system availability or initiating the correct backorder process introduces further uncertainty. This approach risks damaging customer relationships due to unmet expectations and creates an unmanaged backlog within the order management system, potentially leading to further delays and operational inefficiencies. Professional reasoning. Professionals facing such situation should first assess the true urgency and impact of the request. They should then consult established procedures and, if necessary, seek guidance from their supervisor or relevant department, e.g., order management, finance, to determine the most appropriate course of action that balances business needs with procedural integrity. Documenting all decisions and communications is crucial for accountability and audit purposes. The decision-making process should always prioritize data accuracy, process adherence, and ethical conduct. Question 18. Investigation of a critical customer order reveals that the quantity available in Oracle EBS R12 appears sufficient, but a recent physical check suggests a potential discrepancy. The sales team is pressuring for immediate order confirmation to meet a promised delivery date. What is the most ethically sound and professionally responsible course of action? Option A. Confirm the order based on the system quantity and then discreetly create a manual inventory adjustment to match the confirmed order quantity, assuming the physical count was in error. Option B. Immediately confirm the order and then initiate a cycle count to investigate the discrepancy, adjusting inventory records post-confirmation if necessary. Option C. Confirm the order based on the system quantity and inform the customer that the delivery might be delayed due to an unforeseen inventory issue, while simultaneously initiating a cycle count. Option D. Refuse to confirm the order until a full physical inventory count is completed and the discrepancy is fully reconciled within Oracle EBS R12. The correct answer is B. Immediately confirm the order and then initiate a cycle count to investigate the discrepancy, adjusting inventory records post-confirmation if necessary. Explanation. This scenario presents a professional challenge rooted in the ethical obligation to maintain data integrity and adhere to established business processes within Oracle EBS R12. The core dilemma lies in balancing the immediate need to fulfill a customer order with the potential for misrepresenting inventory status, which can have downstream consequences for forecasting, procurement, and financial reporting. The pressure to expedite an order, coupled with the knowledge of a discrepancy, requires careful judgment to avoid compromising the accuracy of the inventory system. The correct approach prioritizes data accuracy and adherence to documented procedures. By initiating a cycle count and investigating the discrepancy before confirming the order, The professional upholds the integrity of the inventory management system. This aligns with best professional practice by ensuring that all transactions reflect the actual physical stock. In Oracle EBS R12, accurate inventory data is fundamental for reliable order fulfillment, preventing overselling, and maintaining customer trust. This approach demonstrates a commitment to the principles of good inventory management, which are implicitly governed by the need for truthful and accurate record keeping, as expected in any business operation utilizing such systems. An incorrect approach of confirming the order without investigation and then attempting to reconcile later is ethically problematic because it involves knowingly proceeding with a transaction based on potentially false information. This can lead to customer dissatisfaction if the order cannot be fulfilled as promised, and it creates a false positive in the system, masking a real inventory issue. This failure to address the discrepancy directly violates the principle of accurate record keeping, which is a cornerstone of responsible inventory management. Another incorrect approach, that of fabricating an inventory adjustment to match the order, is a direct ethical and potentially regulatory violation. This constitutes data manipulation and misrepresentation of inventory levels. Such actions undermine the reliability of the entire Oracle EBS system, impacting financial statements, audit trails, and strategic decision-making. This is a clear breach of professional integrity and could have severe consequences if discovered during an audit. The professional reasoning process in such situation should involve a structured approach. First, identify the discrepancy and its potential impact. Second, consult established procedures for inventory discrepancies, such as initiating a cycle count or physical inventory. Third, communicate the findings and proposed resolution to relevant stakeholders. Finally, ensure that any corrective actions are properly documented within the Oracle EBS system to maintain an accurate audit trail. This methodical approach ensures that decisions are informed, ethical, and aligned with system best practices. Question 19. What factors determine the appropriate course of action when a purchasing manager discovers a significant discrepancy between a received shipment and the purchase order in Oracle EBS R12 and is under pressure to close the receiving transaction to meet a critical production deadline? Option A. The urgency of the production deadline, prioritizing the immediate availability of materials over the accuracy of inventory records. Option B. The established internal controls and procedures for investigating and resolving inventory discrepancies, regardless of the immediate impact on production deadlines. Option C. The purchasing manager's personal assessment of the likelihood of the discrepancy being a minor error that can be overlooked. Option D. The ability to quickly assign blame to the receiving team to expedite the closure of the transaction. The correct answer is B. The established internal controls and procedures for investigating and resolving inventory discrepancies, regardless of the immediate impact on production deadlines. Explanation. This scenario presents a common ethical dilemma in inventory management, where a purchasing manager is pressured to overlook discrepancies to meet a deadline. The challenge lies in balancing the immediate need for expediency with the long-term integrity of inventory records and adherence to established business processes. The purchasing manager must navigate potential conflicts of interest and maintain professional objectivity. The correct approach prioritizes accurate record keeping and adherence to documented procedures, even if it causes a delay. This aligns with fundamental principles of good inventory management and internal controls, which are implicitly supported by Oracle EBS R12's design for data integrity and auditability. Maintaining accurate inventory data is crucial for financial reporting, operational efficiency, and preventing stockouts or overstocking. By following the established process for investigating and resolving discrepancies, the manager upholds professional integrity and ensures the reliability of the inventory system. This approach prevents potential financial misstatements and operational disruptions that could arise from knowingly accepting inaccurate data. An incorrect approach that involves ignoring the discrepancy to meet the deadline represents a failure to uphold professional responsibility and potentially violates internal company policies and ethical guidelines. This could lead to inaccurate inventory valuations, misinformed purchasing decisions, and a breakdown of internal controls. It prioritizes short-term expediency over long-term accuracy and accountability. Another incorrect approach, such as fabricating a reason for the discrepancy without proper investigation, constitutes data manipulation and dishonesty. This undermines the trust in the inventory system and can have severe consequences if discovered, including disciplinary action and damage to professional reputation. It directly contravenes the principles of accurate data entry and reporting. A further incorrect approach, such as blaming the receiving team without evidence or a proper investigation, is unprofessional and creates a hostile work environment. It avoids addressing the root cause of the discrepancy and unfairly targets individuals, hindering collaborative problem-solving and potentially masking systemic issues within the inventory process. The professional decision-making process in such situations should involve 1. Recognizing the ethical conflict and the importance of accurate data. 2. Consulting established company policies and procedures for handling inventory discrepancies. 3. Communicating the issue clearly to relevant stakeholders, including supervisors, and explaining the implications of proceeding without resolution. 4. Advocating for the necessary time and resources to investigate and resolve the discrepancy properly. 5. Documenting all actions taken and decisions made. Question 20. When evaluating a situation where a sales order is being entered for a high-demand item, and the Oracle EBS R12 system shows an on-hand quantity that is insufficient to fulfill the order, but the sales representative believes the inventory will arrive before the scheduled ship date, what is the most ethically sound and professionally responsible course of action? Option A. Acknowledge the discrepancy, communicate the potential shortfall to the sales team and relevant stakeholders, and explore options such as backordering, offering alternatives, or confirming the incoming inventory's exact arrival and commitment before booking the order. Option B. Manually override the systems available to promise at calculation to show sufficient stock for the sales order without making any changes to the actual on-hand quantity. Option C. Proceed with booking the sales order as is, without any system adjustments, and inform the warehouse to expedite the physical inventory count to resolve the discrepancy before the ship date. Option D. Adjust the on-hand quantity in Oracle EBS R12 to reflect the expected incoming inventory, allowing the sales order to be booked and processed immediately. The correct answer is D. Adjust the on-hand quantity in Oracle EBS R12 to reflect the expected incoming inventory, allowing the sales order to be booked and processed immediately. Explanation. This scenario presents an ethical dilemma common in inventory and order management, specifically concerning the integrity of inventory data and its impact on customer commitments. The challenge lies in balancing immediate operational pressures with the long-term consequences of data manipulation and the ethical obligation to maintain accurate records. The pressure to fulfill an order, even with known discrepancies, can tempt individuals to misrepresent inventory levels, which erodes trust and can lead to significant financial and reputational damage. The correct approach involves acknowledging the inventory discrepancy and communicating it transparently to the relevant stakeholders, including the sales team and potentially the customer, to manage expectations and explore alternative solutions. This upholds the principle of data integrity, which is fundamental to sound business operations and regulatory compliance. Accurate inventory data is crucial for financial reporting, operational planning, and fulfilling contractual obligations. By addressing the issue directly, the organization demonstrates a commitment to ethical business practices and proactive problem-solving, which builds trust internally and externally. This aligns with general business ethics that emphasize honesty and transparency. An incorrect approach would be to artificially inflate the on-hand quantity in Oracle EBS R12 to allow the sales order to be booked and processed. This constitutes data manipulation and misrepresentation. Ethically, it violates the principle of honesty and integrity in record keeping. From a business perspective, it creates a false expectation for the customer, leading to potential backorders, delayed shipments, and customer dissatisfaction. This can also trigger downstream issues in production planning or procurement if the system believes stock is available when it is not. Another incorrect approach would be to ignore the discrepancy and proceed with the order, hoping the inventory will materialize before shipment. This is a passive form of data misrepresentation. It fails to address the root cause of the discrepancy and relies on chance, which is not a sound business strategy. It also bypasses the established processes for handling inventory exceptions, potentially leading to further complications and a lack of accountability. This approach demonstrates a disregard for established procedures and a lack of proactive management. A professional decision-making process for similar situations should involve a clear understanding of the organization's policies regarding data integrity and inventory management. When faced with a discrepancy, the first step is to investigate the cause of the discrepancy. Following that, it is crucial to communicate the findings and potential impact to all affected parties. This communication should be factual and transparent, outlining the problem and proposing potential solutions, which might include expediting stock, offering alternatives to the customer, or adjusting delivery timelines. The decision should prioritize long-term business health and ethical conduct over short-term expediency.